Prices are increasing at a dramatic rate here in the DC area. It's Fairfax, Arlington, Alexandria, Falls Church City, and Fairfax City is generally what I'm talking about. And what I wanted to bring to the table today, here about mid-year 2021, is that we are seeing an astounding increase in the listing prices of properties. What you're looking at here, you might think that each one of these price points, it represents a year. No, these represent a month. In October of 2020, the median housing price was $572,250. Now, we use median, the professionals use median because it shows us what's going on with the whole market as a whole. To use an average, let's say, there's a $40 million property on the market right now in Northern Virginia. Well, if I take that and add that to my average price, it's going to make that 572 higher. But if I've got, 1,000 properties on the market and that middle price is 572,250, then all the houses above it are above that price. All the houses below it are below that price. So I got 499 houses that are below 572, and I got 499 houses that are above 572,250. So we see that in November, prices dropped, and the median price of the ones coming on the market dropped to $550,000. Look now what's happening up here in the beginning of this year. Actually, we're getting toward mid-year. They went up to $649,900 in April, $100,000 increase in the list prices that were coming on. So why is that going on? Well, back in November, there were these prices, the houses that came on the market, people escalated them. Well, they escalated them so much that the agents and the sellers put it on for an additional $14,000 the next month. Well, they escalated and they moved up again. And so the next month in January, sellers started coming out with those properties at 575. And as you can see, they kept moving upward through that time period to where we now have 640,000 is the average listing price, or the median listing price that's coming on the market in the Northern Virginia area. So we talk about that, and what we look at is what are the trends. So this is my trend line showing what's going on, and we see that it's continuing to trend for the last 6 months. And that is a 16.5% increase in the median list price that's coming on the market in the Northern Virginia area. Folks, that's a 33% annual rate of increase. So that's not sustainable. I do project this is going to level off. And I think it's going to level off because buyers are just going to start backing away from the table and wait to see what happens. The difference with this type of market than the last time we saw this back in 06 and 07 is that we didn't have funny money in the market. And also we did not have the bank failure that's going on. The banks look like they're not doing funny money, and the mortgage companies are dealing only with real money and only real buyers. So we see that at least that end of it is pretty secure. But a 33% annual rate of increase, it's going to, just by virtue of wiping out a lot of buyers that just can't keep moving up at that pace, you're going to have the ones that are well moneyed that are going to stay in that marketplace, but they won't be competing with as many. There won't be 1,000 buyers looking for the 100 houses. We'll get back down to 200, maybe 150 buyers looking for the 100 houses, and that will level off the increase. I just think that that's probably what's going to happen. Hey, I could be wrong. I don't have a crystal ball. But what's making it go up? You would think, what's making the price of houses is driving the market? No, the price of money is what's driving the market. Let me explain this. Back in 2000, and look at each one of these bars. On the left side, I have the year 2000. The interest rates in 2000 were 8%. And so a $400,000 mortgage, which is what all these bars are based on, and the line is based on this right side over here. Those are the interest rates that mortgages were going for. This is from Freddie Mac. So if you borrow $400,000 in the year 2000 at 8%, you would have paid $2,949 for that mortgage, for borrowing that $400,000. Now that's just the principal and interest. Well, let's go through the years. Every 5 years, interest rates came down to 5.87. And then interest rates came down to 4.69. You see the payment is dropping. We're almost down $900 by the time we get to 2010. 2015, we got the sub 4% interest rates, and all of us in the business thought they'll never go lower than that. They'll never hit 3.5, 3.25. And yet, look what happened 5 years later. We enter ourselves into a pandemic. We got to shore up the real estate market because, as we know, the real estate market drives a whole lot of the economy. The lowest the interest rates got to, which is about October of last year, was 2.68% on a 30-year fixed loan. And for 2.68%, you could have borrowed $400,000 for $1,618 per month. Right now, they're running around 3%. So a few months later, you're now getting that money for $1,686 per month. Look at that. That is almost a $1,300, almost a 50% drop in your monthly payment for the same money for $400,000. So what's going on right now, folks, is buyers are not chasing the price. They are chasing their payment. The interest rates are driving this market. So even if the prices were to drop, people are not as nervous about that because they feel like, well, I know I bought this place for $550,000, or let's say I bought this for $460,000, and my mortgage is $400,000. Let's say it drops down to $420,000, of which I bought for $480,000. But what's the difference? Well, my monthly payment is so low. If I need to move out before that price property comes back up again, I can rent it out for more than $1,686. That's the thoughts that are going through here. And unless the bottom absolutely 100% drops out, if you have to leave your property, if we have a drop in prices of property and you got to leave your property, but you've got that kind of payment, you'll be able to rent a single family house or a townhouse out for that kind of money. Let's go fast forward to May. And this is looking from January to May of this year, looking at the number of listings that are coming on the market. That's this amber looking line. Then we have the shadowed line. The shadowed line is the number of contracts that are coming onto the market. We listed, maybe we listed, about 700 properties. And that week, about 550 properties went under contract. So that's what that's measuring. Then you have this lower line here, which is measuring the closings that are going on. This is not cumulative. These are individual weeks, which is a natural flow for the year. Week 1, week 2, week 3, so that we now see that we've got about 925, 940 listings coming on that month, that week. And down here, we've got about 710 that are going under contract. So what's happening here, though, look at this. There's a divide going on between the listings and the under contracts. Back here in week 5, early February, January, February, we had a much closer differential between the number of listings on the market and the number that were going under contract. We're seeing a year-long trend line. That's the green. Oh, this is going to continue. And the green is for the pendings. That's going to continue. Well, that can be something that's not really telling the truth. And let me take a look at what I hear. This is something that we're seeing just for this month. Look at my green line, which is my new listings. Look at my red line, the dotted line, which are my under contracts. What's the trend line now for May? I'm just saying we may have hit a point where buyers are starting to back away because the prices are hitting that high level that they're just like, I can't take the fact that that's where that's going. I know my payment's only $2,000, $2,400 a month for this, but if the market drops, I don't know that I can sustain what would happen. What I'm looking at, though, is where are my peaks? The peaks continue to move up, and the peaks are starting to move down on the pendings. So that's kind of the thing that's making me take notice on what is going on with the market in Northern Virginia and what does that mean for buyers and sellers. So the pending contracts, the trend line for month to date is starting to dip. And I sent this postcard out to some investors in Northern Virginia, actually specifically Springfield, the zip code, showing them what's going to happen. Yes, this is over 20 years. Yes, you're going to have a top, you're going to have some drop, and at the bottom of the drop, it's going to come in. However, I want to point out that when this drop happened in Northern Virginia, it was because of the bank failures and the funny money in the market. It was not a normal situation. This is more normal right here. As you saw, this was more normal in 5 years. What was going on there? We had the dot-coms going on, and it was post 9/11. And we had the Department of Homeland Security was building up. Then we had the funny money, and then we had the regular flow up here. But right now, this increase is because of the interest rates and what's going on there. Thanks for listening today. Don't forget, subscribe to my channel, like what you got here, comment on it, share it. If you got any questions, enter them below. Be happy to help you out with that. And I really appreciate you coming by and listening to my channel. Have a great day.